Welcome to another session of Personal Finance, where we're looking at earnings per share. We're going to be looking at earnings per share. What is it? Earnings per share. Okay, so by the end of the session, you should have a better understanding of earnings per share for investing in shares. So I've been hearing a lot about prospective clients wanting to understand how you invest in the stock market and investing in shares. So this session, you're going to understand the earnings per share. So what each share would earn you. Okay, so we're going to look at what is share price and the application in terms of the concept of earnings per share. And we're going to also look at, we're going to use a company's example in terms of earnings per share. Okay, so earnings per share. It means the amount of money a share earns in a period. So a share, let's say for example, is let's say for example a share is £5. The share, which is £5, can earn £1 for the period, okay, in terms of profits. So basically, you want to know that your share is actually earning you something every year or every quarter, depending on the time profits have been declared. Now let's have a look at this example here. Let's first of all look at the formula. Now the formula says earnings per share is the share price divided by the times. That's the earnings per share is the share price divided by times. And times, if we want to also find the times, it's times is equal to the share price divided by earnings. So times is equal to the share price divided by earnings, but earnings per share is the share price divided by times. Now let's have a look at an example where we can apply the principle. If a share price is 2,000 and we know a company like Amazon has a share price of about 2,000, and if it is earnings per share is 150, let us work out the times. So the times here is actually going to tell us how many periods or years it's going to take us to recoup our initial investment in buying the share. So if the share price here is 2,000 and the earnings per share is 150, 2,000 divided by 150 gives us 13 times, 13.3 times. So therefore, we can say that this share, it will take 13 years approximately to recoup their initial investment. So it will take quite a bit of years in order for you to recoup the investment. So this share is earning a small percent in terms of its actual costs. It will cost the shareholder $2,000, but it earns $150, and it will take 13 years to recover that that $2,000 spent on the share initially. And if we were to look at another example where we have the share price, which is 800, but we worked out that the times is 12, so the share is actually earning 12 times. So 800 divided by 12 will give us the earnings per share of 66.6. Alright, so therefore technically this share actually earns almost 67 pence. Okay, so it's $800 was spent on the share, and it actually earns about $67, rather, not pence but dollars, $67. Now let's have a look at an example. Let's look at Google and Facebook. Now I've gone and done some research, and I've actually found out on their website using Yahoo Finance. I was able to ascertain some of this information. I was able to find the earnings per share for Google for 2019, and the earnings per share for Google 2019 is $49.59, and in 2018 it's $44.22. But the share price in 2019 was $1,330.11, and before it's an approximate. I was not able to actually get 2018 December, 2018 January, so I got February, so it's hovering around this amount. It's $1,139.57. So we can see over the period the share has almost climbed by, I would say, nearly $200 over the period. The share have actually appreciated over the period, but its earnings per share, it has increased slightly by nearly $5 or thereabouts. So its earnings per share is relatively stable, but the share price is appreciating quite significantly over the period. Now, if we were to work out the times, we would realize here that in 2018, it's 25.77. So it would take you 25 years or nearly 26 years for you to recover your initial investment based on the earnings that Google is getting. Now, mind you, if you are driven by earnings, this is not the share for you. But if you are driven by appreciation of that share, because the driver here is a share price appreciation, so your wealth would grow by share price appreciation and not necessarily grow by earnings in this particular example. Because if you were to wait around for 25 years or 26 years to recoup your investment, then it would be, a lot of things could have happened in that period. Now, if we look on the other year, which is 2019, the earnings, the times is 26 or nearly 27 years. So it would take you 27 years for you to actually recoup your investment over the period. And again, that is very, very high. Not a lot of people would be willing to do that. I did some additional forecasting. I was able to ascertain that the share price currently for 2020 is $1,448.23. Now, if we look the previous year, which is 2019, it was $1,330. So it has appreciated over the period by $100. Now, if we were to use the same 26 times, we can almost work out the earnings per share of $55.70. So we have a similar earnings, slightly higher, maybe about $10 higher, $5 to $10 higher compared to the previous period. So again, its earnings quite low, but the share price is appreciating significantly, between $100 and $200 every year. Now let's have a look at Facebook. Based on this example, we have Facebook is, in 2017, its earnings per share is $5.49, but in 2018, I was not able to get 2019. But yeah, in 2018, it is $7.65. So we see here that its earnings per share has increased over the period by about $2. Its share price, however, in 2017 is $176.46, and its share price fell to $131.09. I will assume that the fall in the share price is maybe a function of two variables. One, they had a scandal about privacy and data management, and that may have caused a dip in the share price over the period, where they had to declare information to the Senate about how data was handled. And also they bought a few companies, Instagram and WhatsApp and maybe a few others, so that may have mopped up some of the cash that they had and may have caused shareholders to be a bit tentative because of these acquisitions. But it doesn't negate the fact that this company has good potential, and I think has a huge prospect. As mentioned before, it has one of the highest member bases, and this platform is far reaching because it has nearly 1 billion members all over the world. So let's have a look at the times. Now for 2017, based on the earnings of $5.49, it will take you 32.14 times, which means it will technically take you 32 years to recover your investment if you are only seeking the earnings to recoup your initial investment. And in 2018, with the drop in the share price, the earnings, the times has fallen to 17.14. So it will take you technically 17 years in order to recoup your initial investment or your initial purchase of a share of $131.09. Now, if we were to look at a forecast for 2020, we know the actual share price as of the current date in 2020 here is $210.11. Now, if we were to use the previous times of 17, we can work out the expected earnings per share of $12.36. So it would maybe double the earnings for the previous period. Again, these two companies are in a similar industry. They do not have high earnings, but their share price appreciation is quite significant. And I think if you're an investor, looking for earnings is maybe not the best place for you. But if you're looking for good appreciation of the share over the period, you will more likely have your wealth grow via share price appreciation as opposed to the earnings. So in conclusion, we've looked at share price and we've looked at earnings per share, and we said that earnings per share is the share price divided by the times, and if you wanted to find the times, it's the share price divided by earnings. And we've looked at the two companies, which is Facebook and Google, and we've looked at their earnings to ascertain what's best, which company has takes longer in terms of recovering your investment. I hope that you learned something from this, and subscribe and